Step 1. Understanding investment basics. Welcome to Investing for Beginners. The first step is to understand the basics of investing. Learn about different investment vehicles like stocks, bonds, mutual funds, and real estate. Familiarize yourself with the concept of risk and return to make informed decisions. Step 2. Defining your investment goals. Identify your investment goals and time horizon. Are you investing for retirement, buying a house, or funding your child's education? Defining clear goals will help you choose the right investment strategy. Step 3. Assessing your risk tolerance. Determine your risk tolerance, how comfortable you are with fluctuations in the value of your investments. Your risk tolerance will influence the mix of investments in your portfolio. Step 4. Diversification is key. Understand the importance of diversification. Spreading your investments across various assets and industries can reduce risk and enhance the overall performance of your portfolio. Step 5. Investing in stocks. Explore the world of stocks. Understand how to research companies, analyze stock performance, and choose the right ones for your portfolio. Consider starting with index funds for broad market exposure. Step 6. Bonds and fixed income investments. Learn about bonds and fixed income investments. Discover how they can provide stability and regular income in your portfolio. Government bonds, corporate bonds, and bond funds are common options. Step 7. Exploring mutual funds and ETFs. Discover the benefits of mutual funds and exchange-traded funds, ETFs. These investment vehicles pool money from multiple investors to diversify holdings across various assets. Step 8. Real estate and alternative investments. Explore real estate and alternative investments. Real estate can offer both income and appreciation potential, while alternative investments like commodities or peer-to-peer lending can add diversification. Step 9. Building your investment plan. Create a solid investment plan based on your goals, risk tolerance, and time horizon. Allocate your funds across different asset classes and rebalance periodically to maintain your desired asset allocation. Step 10. Staying informed and seeking guidance. Stay informed about market trends and economic developments. Continuously educate yourself about investing and seek guidance from financial advisors if needed. Understanding your investments is key to making sound decisions. Remember, investing is a long-term journey. Stay patient, avoid emotional decisions, and let your portfolio grow over time. By building a strong investment portfolio, you'll be on your way to achieving your financial goals and securing a prosperous future. Happy investing!